Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'm a Senior Account Manager with the company. I'll be leading the session this afternoon. Before we get going, just give me a quick okay in the chat box if you're hearing me clearly and seeing my screen all right. Okay, I've got enough responses. Thank you. Looks like everything is up and running fine. If anyone runs into any issues, just let me know. I'm happy to try and work out any audio problems you might be having or video. Jennifer, welcome. Good morning to you as well. Depending on where you are, maybe good afternoon. Okay, so fundamental analysis is the focus today, and there's a few things to look at. Some news out there that's moving the markets a little bit. It's more of a choppy trading day. A little bit of trending in the upward movement on the stocks and the indices. Some currencies with some nice movement and announcements to look at that could be driving those. And so we'll take a look at the fundamentals behind everything and then jump on the charts and see what kind of technical entry and exit points might make sense on some of the assets as a strategy. As we get going, keep in mind all investments have risk, including each and every trade that you make with Forex trading, spread betting, options trading, CFDs, etc. Certainly no profit is guaranteed, but also at the same time, there certainly is the potential for nice profit with each and every trade that you take. So the idea here is to manage risk in a way that makes sense to you and go after the profits that hopefully will add up to more than the losses at the end of the day, the end of the week, etc. As we go through from an educational perspective, the strategies and concepts that we cover today, keep in mind that it's not meant to be financial advisement, but it's coming from a perspective of learning and adding to your knowledge base and helping you to improve upon your trading strategies or build a new trading strategy from the beginning if you're brand new to things, so that hopefully you improve upon things as you move forward to be a profitable trader in the long term. Now, some might ask, well, what is fundamental analysis? And you may have heard of fundamental analysis and technical analysis. Technical analysis, we'll do a bit of that after we go over the fundamentals. The technicals are on the charts, looking at the historical movements. The fundamental analysis is more looking at the news stories, the economic information that's out there from announcements and headlines, that sort of thing. And there are two general categories of fundamental analysis that we can do. We can look at what we might call regular economic events. Those are, an economic schedule we could look at, know exactly when certain PMI numbers or jobs numbers or factory output numbers, etc. We'll know exactly the topic and when they'll be, what country they're being announced from, and what currency or assets they're expected to affect. Okay, that's one type of fundamental news, more certain in terms of timing and scope, etc. The other type of fundamental news would be the extraordinary economic events, like headlines breaking that are unexpected. Could be a headline about output of oil production, which happened and oil went shooting up today. We'll look at that article. It could be a headline about something about the coronavirus spreading worse, which we see some headlines about that now that came out and could play a role in the movement of the assets. And so, not that long back, it was the Brexit headlines that came out, with the UK leaving the European Union, and every other day it was a new headline and the markets were up and down and back and forth. Okay. And so that type of fundamental news, although you don't know when a headline might come or exactly what it might say, you can still prepare in advance, usually with pending orders, for potential breaking news that might occur. Kind of like putting trip lines in the market so that if news swings the markets one way really strong or the other way, you can be ready for it. Okay, so two main types of fundamental analysis. We'll look at both today, and then we'll jump on the live charts and look at the movements to see what kind of opportunities might make sense to take advantage of. So we started out the webinar talking about managing risk, that each and every trade has risk, and you should understand that. Now, one way to really understand the risk that you have is to use a tool that calculates the risk to your stop loss, your potential profit, those things for you. And we have two platforms that do that for you, that are built by AvaTrade. One would be, if you look at trading platforms, you go to our AvaTrade Go mobile app. Okay. Now this will work right over top of your MT4 or your MT5 account. So you can log in using the AvaTrade Go mobile app and trade on your MT4 and MT5 account. Whatever trades you open on either entry point, whether you trade on the MT4 and then look on the app or vice versa, the trades are the same trades. They'll show up one place and then the other as well. Okay, you can manage them from the same place. The app has some nice features. It has AvaProtect. AvaProtect is a feature that for a small premium price, you can protect against any and all losses that would occur during the protected time period. You can choose 1 hour, 4 hours, 1 day, 2 days, etc. of protection time. So it's a useful risk management tool, especially if you expect that there's the potential for breaking headlines that could completely mess up your strategy. And then you know, I'm covered. For a small premium cost, I'm covered if things shoot the wrong direction. Okay. Other useful tools on the app are when you put your stop loss, it calculates your exposure, your risk to that stop loss price based on your trade size and your stop loss price. Same for your take profit. It calculates what your potential profit is. So very nice risk management features, useful trade calculator features that are within the order window. So you know all of this information before you ever buy or sell. Okay. And if you want to use our WebTrader program, so some maybe prefer to trade from the full screen like we're looking at now, then you don't have to just use the mobile app to get those features. You can use our home-built WebTrader platform and simply log in from the main website and you'll be on this platform. Okay, some were asking that in addition to the MT4, we go over the WebTrader platform a little bit. So this is AvaTrade's home-built WebTrader platform. It has a nice feature. You can shrink the chart. You can grow the chart. This is your favorites list. A lot of things you can do with it. It's very intuitive platform. I can expand the chart to full screen. I can minimize it. I can scroll in and out of the chart. Very useful features. You can add your indicators here. Okay, I can add whatever I want. You choose the one you want. Okay, then you would click save and it loads it on the chart. Okay, you also have other useful tools like I was showing you with the app. For example, I don't care what it is, maybe I'm selling on NASDAQ and I haven't done any analysis for saying this is a good trade or not. I'm just giving an example here. So if I'm going to buy or sell on NASDAQ, okay, I've got my trade size here. Can make it bigger or smaller. It tells me the lot size and the number of indices in that lot size. It also tells me how much margin I need. Look at that. It tells me in my account currency how much margin is required to open that trade. So I don't have to try and calculate it myself. Also, I can say take profit. If I want to take profit at a certain price, if this is a, let's see, sell position, then let's make my take profit at 11,400. There's my potential profit. It just calculated it into my account currency, what my profit would be if I took that sell position now and it hit that price. I also can say, well, what about my risk? Maybe I say my stop loss on this sell would be 11,800. Okay, I put that in, boom, there's my risk. 450 risk. And I might say, wow, that's too much. But maybe this is where my stop loss is supposed to be, because maybe that's where the resistance level is that I think it won't go past and that I'm safe. And I feel in my strategy that I need my stop loss at this price, but maybe I don't want to risk that much. So what can I do to lower my risk? Maybe I only want to risk 200 or 100. What can I do? I can lower my trade size. Watch as I lower the trade size, what happens to the level of risk. You see, now it's 290. I click down to one indice. Now I'm only risking 145. Okay, so very useful when you're setting up a trade to understand your potential profit, your risk, and the comparison between the two based on your trade size and how much margin is required as well. Also, what else can we do? Execute when price hits. That's a pending order. I don't have to know whether the pending order is a buy stop or a buy limit, a sell stop or a sell limit. In the MT4 platform, you have to know. Okay, if I compare, let me open the pending order status. Okay, when I switch to pending order, look, I have to know what type of pending order. Am I buying from a higher point or buying from a lower point? Is it a buy limit or a buy stop? Or same for sell limit, sell stop. It's more complicated on the MT4, right? If I go to the WebTrader, I can see all I have to do is tell it execute when price hits. I put the price I want and it will sell when it hits that price, whether it's a higher price or a lower price than it is now. That pending order will be made the right type. If I program a price higher and I want to sell from a higher price, it'll automatically make it a sell limit. You don't ever have to pick that. You don't have to know that. With the AvaTrade Go mobile app and this platform, you can just program the trade where you want it to buy or sell from, and you can switch buy from or sell from. Okay, now execute when price hits would buy from that price. Very simple. And I mentioned AvaProtect. AvaProtect is available on all currency pairings, gold and silver. Okay, so if I open an asset that has AvaProtect on it, okay, then you see the option. You see the gold shield. That's the AvaProtect symbol. That means you could use AvaProtect on this asset as well. If you check that box, it says, how long do you want the protection against loss? 1 hour, 3 hours, 6 hours, 1 day, 2 days, etc. Right? It tells you the price. Look, only $24 and change for 2 full days of protection. Right? So, and now if the trade size goes larger, okay, the protection is a little bit more. Okay. So, and if the length of coverage of protection is different, then the price changes as well. But you might look, what's my potential profit? If I program my take profit and I say, okay, what's my potential profit compared to the cost of the premium? You, with some strategies, especially if you're waiting longer to take the profit, you'd say, wow, okay, the potential profit's a lot more than the cost of the premium. And so maybe that works out to be part of your strategy, this type of protection. Okay, any questions on that before we moved to the fundamental news? Just type okay if you're with me. Okay, great. And there are other things here as well. You know, Trading Central, you can get all kinds of market information. The economic calendar is built into this platform, all kinds of nice features. Okay, so very useful platform. Now, what's going on fundamentally right now? We've got a mix of good news out of Great Britain. Okay, retail sales were really good in Great Britain. Okay, and then we go later in the day. Wow, factory numbers, manufacturing and PMI numbers were not good, worse than expected out of Great Britain. So we've got a mixed bag here. Retail doing good, makes sense. People are coming out of quarantine, and so the spending went up. Retail sales are up as the quarantines were lifted, but factory production is still muted a little bit. Okay, not as high as expected. So mixed bag for Great Britain. Then we look at European announcements. Worse than expected, some of them. Better than expected, some of them. Same thing. It's a mixed bag in terms of the economic announcements out of the European Union and Great Britain. Later today, we'll have US announcements as well. Okay, those have not come in yet. So we see accordingly, the market's kind of flat, right? The futures are slightly green. Okay, yesterday, these are the non-futures. So this is yesterday's market's closed in the green, and the futures are slightly green today. And the volatility is flat, less than 1%, one direction or another is pretty minimal for volatility. So the fear index, the volatility index is what this is referred to as, kind of flat, but more towards a drop in fear. So if anything, you'd say the sentiment today is slightly positive, but not a huge factor. It's not like we're looking at volatility being up or down 5% or 10%, less than 1% in either direction right now, but leaning towards lower fear and some optimism on the markets with the green futures showing. And typically when there's optimism, the US dollar has been weakening of late. The US dollar has been weakening with positive economic sentiment. So when the markets have been rising, the US dollar has been weakening through this recovery from the pandemic. And so we see that today. US dollar as a whole, the dollar index is weakening against a basket of other currencies. So against the euro, the pound, the yen, the Swiss franc, etc., US dollar is currently weakening by a pretty significant amount. 0.25% for the dollar index is pretty meaningful, okay? As opposed to the volatility index, 0.5% is not so meaningful. All right, so what else is happening in the headlines? The other type of fundamental news, we looked at the announcement schedule. Now, what about the unexpected news headlines? Negative, right? Europe's economy risks new contraction from virus curves. Okay, that's a negative headline for fear in the European Union over more virus spread and a negative effect on the economy. What's the next headline? Putin says Russia open to delaying planned OPEC plus output hike. Okay, let's undress that headline. If Russia is open to delaying an increase in output, that means prices likely on oil would spike up, right? Because an increase in oil output would increase supply, causing price to drop. Hello, Amir, welcome. Typically, right? A larger supply of anything causes the price to drop on things, simple supply and demand. So when you see a headline that says Russia's open to delaying the hike in output, the raising of output of oil, then it makes sense why oil spiked today, okay? So the headline led the way, and if you had been watching and saw this headline earlier, you could already have been weighing the money on oil, okay? So this fundamental headline explains the movement in oil today. Russia and the OPEC plus nations may be looking like they could delay any increases in oil output. Okay. Another headline that doesn't look so good for the Eurozone. Business activity contracts in October as COVID-19 resurges. That was the PMI data that we already saw. Okay. Yeah, not a commitment, Mark. You're right. Mark is pointing out that they're open to it, but not a commitment. But many times people trade on speculation, not on fact. Markets move many times on speculation. And when this headline came out, we'll look at what happened on the chart. So, and you're exactly right. Even if right this second they did agree, does that change the oversupply of oil that's already there? It doesn't. But immediately, if they had an agreement not to increase production, you'd see oil probably spike up even further than it already did. Why? The oversupply of oil that had the price lower is still there. It didn't disappear just because they made an agreement. The price, though, would spike up in anticipation of what should happen or might happen in the future. Again, speculation. And so what do you think would happen with that price spike if the opposite headline came out 10 minutes from now? Russia changes their mind. They will up production. You know, if that headline came out, prices would come right back down. And was there ever really any change in the global supply of oil just because of those headlines? Of course not. Not immediately, but immediately the price moved. And that happens all the time with lots of assets across the board. As you see headlines hit, whether they're going to be carried out or not, you see price movements, and predictable ones at that. All right, so we already looked at that headline. Global stocks bide time as U.S. election caution sets in. Again, I'm seeing kind of these headlines are putting the reins on the optimism. They're kind of putting a lasso around the horse and slowing it down, right? Why? Because there's fear about the U.S. election, not just in the U.S., but globally as to what the policies are going to be in the U.S. with corporate taxes, with global trade, etc. All of that's on the line with this election. You couldn't have more differing viewpoints of how to run an economy between Trump and Biden. Whichever one of them gets in the White House is going to tip the scales one direction or another, one with much lower taxes, one with raising taxes, one with less regulation on businesses, one with more regulation on businesses, etc. So this is something that as the headlines come, it will move the markets, especially as it gets closer and closer to election day in the US, which is that first week in November. Okay, so it's something to keep an eye on. And again, the word caution implies a little bit of fear, okay, which explains why even with the markets rising, the volatility index is not dropping so much. It's kind of going sideways, okay? And we looked at this. So let's then go to my demo here on the MT4 platform, okay? And by the way, if you're playing around with a demo account, you'll notice on that WebTrader platform and the AvaTrade Go app that the Ava Protect feature, the Trading Central economic data information, that stuff's not all available. You got to make sure you have a live account, and then you can utilize all of those particular features. Okay, so as we look at the movements, then let's keep in mind the momentum's not that strong today either direction, which means it's probably a good day for expectation of trending movements not to break through support and resistance levels, and for the movements more to be ranging. And what I mean by that is a trend tends to keep going in one direction, okay, breaking through support or resistance levels. A range tends to go up and down within a defined high point and low point. And when there's not a lot of strong fundamental news to cause big breakthroughs, then many times you can do best trading on the expected ranging movements, like this dropped from the exact spot as this one, okay? The movement is ranging right now. Okay, these are 5-minute candles. This goes back several hours of initial optimism today and then sideways movement. Okay, so you've got a support level here. This is the S&P 500. You've got a support level in this region and a resistance level up here. So what kind of moves could you make if you expect more ranging movements? What kind of pending order would buy from right down here? And by the way, if you're on the WebTrader, you could just say buy from, and you could put this price, and it would make it a buy limit automatically. A buy limit buys from a lower price. So if you want to wait until it gets near this support level and you expect it to bounce up like it did the last time, okay, then you'd program a buy limit. So how do I do that? I would come here, change from market execution to pending order, and I put my appropriate trade size for my balance, for my target, for my goals, and now buy limit buys from a lower point. 34, let's say 34.52 is my entry, maybe 34.52. My stop loss would be just below the support. If it breaks the support, maybe I give up. So 34.50 maybe. for my stop loss, 34.50. And my take profit could be up here, 34.59. Okay. So there's my pending buy limit. It would have to break this support level and hit this spot for me to give up on the move. I'm risking about 1/3 of my potential profit to take profit just before this resistance level up here. And maybe I say, okay, I could go a little higher with that actually, right about there. Okay, it's more like a 3-to-1 ratio. I'm risking about 1/3 of my potential profit. Okay, and so that's an entry point that makes sense today. Number one, the momentum's a little more positive today than negative. Also, this support level held the first time it tested and bounced. The resistance level held once and dropped, held again and dropped. So also, what kind of pending order could I put up here? That if it does hit my take profit, or maybe it just comes up here first, I could sell from the resistance if I expect the ranging movements to continue. What kind of pending order sells from a higher point? I did a buy limit to buy from a lower point. What kind of pending order sells from a higher point? Again, the AvaTrade Go app, the WebTrader platform, all you'd have to do is say sell from and put the price you want to sell from. If you want to do a pending order on the MT4, you go to pending order and you say sell limit sells from a higher point. Sell stop would sell from a lower point. So you have to know sell limit. Then we enter the price that we want to sell from. Let's say 34.59. Stop loss up here, it would have to break the resistance. So maybe 34.62. Okay, this is a scalp move. This is just small move. Take profit would be back down if it hits the support again, 34, say 52. And there we go. Okay, so now I've surrounded this movement. I'm guaranteed a trade, right? Good question. Gal, a sell limit is if you're programming the pending order to sell from a higher point, like we just did. We programmed a sell limit. If you entered sell stop on the MT4 and put a higher price, it would say parameters don't make sense, because a sell stop by definition is if you're programming it to sell from a lower point. If I wanted to put a sell stop down here, meaning if it breaks this support level and I give up on my buy, I could say, okay, the same reason I would give up on my buy from this location, I will sell. If the movement breaks the support, then I'm going to sell, because I would assume, wow, it must be bad news for the market. So if it breaks this little support level, hits my stop loss on my buy, then I that quickly change my mind and say, nope, now I'm selling because it broke the support level. So that would be a sell stop, selling from a lower point. So let's say if it hits 34.49, then my stop loss I would have back above that broken support, 34.53, let's say. And my take profit then could be at the next support level down here, 34.40 or 34.41. Because if it breaks that support, must be downward momentum. Maybe it'll go to the next support level. Okay, so now I've surrounded this with two moves that are banking on the ranging movement. If it hits down here, it buys, and I'm hoping it ranges back up. If it comes up here, it sells, and I'm banking that it'll fall back down just like it did this time and this time. However, if it triggers the buy and then breaks and it's my stop loss, boom, then I'm in on a sell. Okay, if it hits this green line, and I could make it closer, I could say, okay, if it hits the same spot as my stop loss, then I'm selling also. If my buy loses, then I'm in on a sell. Okay, so in this effect, you're not trying to be right. You're trying to be smart, right? You're saying, first of all, the market's ranging. Let me surround the range with some pending orders that will get in on the ranging movements. If that pattern breaks and there's a breakout move because maybe a headline comes, remember I said we'll prepare for the unknown as well. Maybe a headline comes that causes really bad news for the market. Maybe a headline hits right now and it breaks the support. Well, I didn't know that headline was coming, but I'm ready for it with my sell stop. My sell stop will open if the news changes and then there's all of a sudden fear hits the market and it breaks this support level. Boom, it triggers my sell. Yeah, okay, I lost a little bit on the buy limit. The buy would trigger and I would lose that one. But the amount I lost there is small compared to what I would make if it triggers the sell stop and hits my take profit down here. Okay, so I'm strategically placing entry points where it takes momentum in the market to break that support level or to break through the resistance level. And if those trades get triggered, the momentum should be on my side, right? You don't win every time like this, but this is a way that you can have smart entry points based on fundamentally driven movements, but at technical entry points that make sense. Yeah, Gal, exactly. Sell stop is used for a strong downtrend, and it's a confirmation move. The sell stop confirms the downtrend before entering, which is why you're willing to sell from a lower price. Because at first glance, you say, why in the world would you want to sell from a lower price? Doesn't make sense, right? The idea is you're waiting for confirmation of a downtrend before you sell. So you're willing to take a worse price to sell from, a lower price, for the benefit of knowing, oh, wow, it just broke the support level. Yeah, now I want to sell. That's the idea of a sell stop. The sell limit is this one up here, saying I want to sell from a high point. That's the sell limit, okay? So it's two different concepts. Both can be good concepts at the same time, like I just showed you. The sell limit makes sense. There's a resistance level up here. The sell stop makes sense. If it breaks the support, then there must be momentum, okay? And so we've got a couple things going on here at once. Now, what if it comes up and breaks through this resistance? Doesn't that show an uptrend that strengthened? If it breaks this resistance level here, what kind of pending order would buy from a higher point above that resistance? After it breaks the resistance with momentum, maybe you then say, okay, now I want to buy. What kind of pending order buys from a higher point up here? Say 34.62. A buy stop, exactly. So now I can get in with my buy stop, pending order, buy stop, at price 34.62, the same spot as my stop loss on my sell limit. So if it triggers my sell limit up here, and instead of dropping, it loses and hits my stop loss, then I'm in on a buy with my buy stop because it broke the resistance. I expect potential climb then. It doesn't always work, but again, we're setting this up where the potential profit is a lot more than the risk. So we could be wrong twice and right once and still be okay. Okay. So buy stop, at price, stop loss back below the broken support in that scenario, 34.58. Okay. And my take profit, maybe I go to the 1 hour, 2 hour candles and I see the next resistance level is a certain distance up. So then I put my take profit just before the next resistance level. I'm just going to make it up in this example. Let's say my take profit is 34.75. Okay, place. Okay, now I've surrounded this movement. I will for sure get in on one of the ranging trades. Either the sell limit, it'll sell. The buy limit, it's going to buy if it hits here or here. Banking on the ranging. If it breaks out, which eventually it will, it's guaranteed eventually one of the levels, either the support level or the resistance level, eventually it will break. And then we're either going to have our buy stop, or if it breaks down, our sell stop triggered for a sell or a buy on a breakthrough move. So we're trading on both here. We're trading on what we know now, which is the market's ranging. The volatility index is up less than 1%. So ranging conditions are ripe right now. So these selling from the resistance and buying from the support makes sense fundamentally right now. But we're also preparing for the unknown with our sell stop and our buy stop in case there's a big headline that breaks and causes a huge breakthrough. Okay, so I have a request for gold. Let's move on to that. So the question was, how's the U.S. politics right now with Biden and Trump and everything that's going on with the elections? How might that affect gold? One thing for sure, the markets don't like uncertainty. Okay, the markets do not like uncertainty. So if we're going to look at gold and try and think which way might gold move, we have to understand there's a lot of uncertainty right now in the US in particular and around the world with the global pandemic potentially getting worse in different areas. There's a question also about the volatility index right now. So the volatility index is here for those of you that started maybe late. Okay, we see it here. S&P 500 VIX. Okay, usually when this is in the red, okay, meaning fear is dropping, volatility is dropping, then you would look and see that the futures are in the green, and that's the case. Okay, and lately when fear is down and the futures are in the green, the US dollar is weakening, and that's also the case. US dollar has gotten weaker today. Fear is down almost 1% now. Okay, it's gaining a little momentum. So the markets are turning even more green. That's the idea of the volatility index. Now, how does that relate to gold? You would think with lower fear, gold would drop since gold is a safe haven asset. However, ever since the pandemic hit, it's been the opposite effect. As fear on the volatility index drops and the markets have been rising, so has gold been rising. So it's kind of a backwards situation with gold following the markets to new highs. The NASDAQ, the S&P, the Dow climbing into or near new highs over the past months, and so has gold. So the question is, why would that happen? And the idea is gold investors see that the higher the markets are getting during a pandemic, the more there's a risk of a potential sell-off. Okay, that's one way to look at it. So investing in gold before there's a big crash, maybe this is what people are thinking, that the pandemic's not under control yet. Economies are still having bad numbers. We just looked at the economic announcement schedule. Half the numbers were bad, especially the PMI data, which is the Purchasing Managers Index. If the cost of goods that factories and producers, the cost of goods is dropping, that shows poor demand, right, for products. And so when you see the PMI numbers dropping, the factory output dropping, even though the retail sales are up, that creates some more fear in the market, and potentially you could see gold investors seeing an opportunity to buy gold even more. Okay, so but regardless, we can speculate about reasons why gold is rising. The fact is, it doesn't really matter why it's rising. It has been, right? It has been mimicking the indices. So what we could see with gold is that continued trend. Right now, didn't we see that the S&P 500 was at a resistance level? Well, look, so is gold, right? Support, breakthrough, resistance, okay? It's at a resistance level. The S&P 500 was too. Okay, what do I see on gold as a potential move? Technically speaking, pending order right here. What kind of pending order could you put here that if it breaks that resistance, you're in with a take profit maybe at the next resistance level up here? What kind of pending order gets in at 1913? Whoops, buy stop. Okay, if I get in, yeah, it's a buy stop. Thank you for those who elaborated. So if I get it 1913 with a buy, stop loss would be back below. If it breaks back below that, maybe to 1909. So I'm risking $4 per ounce. My take profit at 1920 Okay, so if I get a breakthrough of this resistance, I'll try to ride the momentum up for a potential profit of $7 per ounce, and I'm risking $9 per ounce. Okay. Now you might say, I don't need my stop loss that far, and I actually meant to put it below, just back below the support level. So there. If it breaks this resistance here, this was support here and a breakthrough. If it breaks the resistance, we could see a climb to the next resistance level. You see how large the candle was that broke below the support? It takes the same kind of momentum many times to break back above. So the kind of candle you saw when it broke below the support, that huge quick drop, you could see the same kind of rise if it breaks back above the support. That's the idea of support and resistance and what we call breakthrough candles. So stop loss, if it breaks above that, if it's just back below that broken support, it shouldn't get hit if it's a true breakthrough. Okay, so you don't need to put it way down here. So now our potential profit is about double what we're risking if we put our take profit up at 1920. Okay, there's our take profit, the dotted line. So about 2 times the potential profit of the risk if that kicks in. We see our first S&P 500 trade kicked in, our sell limit opened. Okay, our sell limit opened, and we're in profit right now. If we go back to the S&P 500, and by the way, you could put a sell on gold right now if you think this resistance level will hold. You don't have to just bank on a breakthrough. You could sell if you think this support level, this old support, which should be resistance now, if you think it'll hold, you could do a market sell on gold, put your stop loss up here. Okay. Let's go to the S&P 500. Okay. Our sell stop, or I'm sorry, our sell limit kicked in. It went back up and hit our ranging movement. Here's our 5-minute ranging movement. It hit the resistance a third time. Okay, once dropped, twice dropped. We caught it the third time. If it breaks the resistance, we're out and we have a buy stop ready to go. If it comes down, great. Continues this ranging movement, then we take our profit down here above the support. Okay, so we're in on our first move there. As a simulation, you don't have to take these trades, obviously, unless it's something you want to do. Georgios, what has bad news? You said today it has bad news. What has bad news? Oh, COVID. Yeah. Listen, we looked at the headlines. And so there's 2 things competing today. Some positive optimism about maybe a stimulus deal in the US, that sort of thing, and negative headlines about the virus getting worse through the European Union. Okay, and in the US as well, there's some outbreaks. So you might expect this resistance level to hold. That was the whole basis of trading on the ranging movement, that there's mixed news and the sentiment isn't large one way or the other. But again, we're setting up that we don't have to be right. We're just trying to be smart. I have no personal grudge if my sell limit loses. It's okay. I'll get in on a buy stop then. No problem. So this is the idea. This is the setup. Following a strategy that makes sense for you and going with what you know now, that there are ranging movements, but preparing for what might happen that you don't know with pending orders. Okay, so here's the Euro USD. Remember I said the USD tends to weaken when there's positive sentiment on the market. Well, look at that. The USD weakened against the Euro, right? The USD weakened against the pound, and then it pulled back. Okay. Does this look like an opportunity? Look at how high it got. It pulled back almost to where the breakout level was. So maybe that you see this as an opportunity to say, okay, let me buy on GBP USD. I'll put my stop loss. Let's go to 30-minute candles. I'll put my stop loss below this support level here, down at 1.3043. Modify. Stop loss 1. 3043. Take profit up at the established high point today, 13112. Oops, I need a decimal point in there. Okay, there's my take profit. My stop loss, 1.3045. There we are. Okay, stop loss. It has to break this support for me to get out. Take profit just before the resistance that it already established as a high today. Okay, so nice technical entry point with a reason to go with the pound against the USD. The USD has been weakening today. It had a little pullback. So maybe that's an opportunity you could go after, right? Small risk. I'm risking about half of my potential profit, something like that, or maybe 60-40, a little bit swayed towards more potential profit than risk, and with the fundamental news on my side, okay? And so we see it's trying to bounce. I think it could test the support a little lower first, but it could just go racing back up. Okay, so crude oil, we talked about it. What's happening with crude oil? We see it went up. No surprise, right? No surprise that oil went up. We saw the headline about OPEC, the OPEC plus, as they call it, because it includes non-OPEC nations like Russia, talking about maybe not doing output increases. And so up went oil. Now, is there a true increase in demand for oil that drove oil prices up? No, it was just some speculation about not increasing production. So there's no real change in the economic status of the world and the demand for oil. So this rise could easily pull back down, right? Because it's not based on real supply and demand factors. It's based on speculation. So you could say, okay, let me catch this high point, sell on oil, because I know the fundamental news is not actual news. It's speculation of what might happen. And so maybe this is an overreaction with oil spiking up. So I could put my stop loss at 41, let's say 1.5. Okay, 41.15. If it breaks the resistance, okay, then I'm wrong. 41.15, not 4,115. Okay, take profit back down here near where it was just a little bit ago. 40.4 makes sense. It's a nice little scalp move. There we are. So now we're risking a bit less than our potential profit. It would have to break this resistance and clear it by that much before we give up. And the potential profit is a bit more than the risk to take the profit before this little support level down here. Okay. And so again, what's driving these moves? Going in the direction of the known fundamental news, but also understanding I'm limiting my risk because the momentum can change. Okay. Yeah, right now, good point, Umar. We're going over scalping strategies. Absolutely, short-term scalping strategies. There are other strategies we could look at. Okay, I can look at oil long-term and say, I think oil could eventually come up and hit the high up here that it was at, around 43.3. So at the same time I'm scalping with a sell move, I could say, as soon as there's certainty about the election in the US, and soon as maybe there's better news about vaccines coming out, which they expect soon for the coronavirus, I think in the longer term, maybe the fundamental news could drive oil up. So maybe I have a long-term move to buy. At the same time, I'm scalping on a sell. And my long-term move is a take profit maybe up around 43. So then I say, okay, modify my take profit is, further away, 43 on the price. Okay, you see a much bigger potential profit. And where should my stop loss be? Maybe it won't break this low point here, right? So let's say 38.7 for my stop loss on that longer term move. So 38.7. There we are. Okay, so my potential loss on this move is about equal to my potential gain, up and down. That's a more long-term move. I'm being more patient with that. I can win on my short-term scalp on the sell and still stay alive on my bigger term view, my longer term view that might be, and I'm not saying this should be your view, but it's an example that your longer term trades can be in the opposite direction even of your short-term scalp moves. Completely different strategies. And that's a good point to make, Omar. Thank you for that input. Any questions at this point? I think we've covered enough. We've been going for about 50 minutes. Okay, everybody, thank you for joining. I expect some more choppy movements today. I think some ranging movements could occur nicely, off resistance levels back down, support levels back up. But as we showed, prepare for the breakthrough moves because you don't know when those unexpected headlines might come. So prepare with buy stops and sell stops in case the news changes, because we cannot control the news. It could come out at any time. Okay, so go trade with what you know now and prepare for the unknown with pending orders. All right, everybody. Thanks for joining. Have a good weekend and good luck with your trading the rest of the day today. Yes, every webinar, good question, Mark. Every webinar is on our YouTube channel under the English webinar section. Okay, and you can get a link for that page from your account manager. Okay, by Monday, by the next business day, each webinar that I do is uploaded to the YouTube channel. Okay, all right, bye for now.